Welcome back, everybody. I'm Jeff Barton. Thanks for joining us here today for the Mortgage Minute. We are for the Mortgage Voice. We have a show that we do on LinkedIn and Facebook, Twitter, and Instagram almost every day. And we bring to you mortgage information about what's going on in the real estate world. Let's get right to it. The conforming limits have risen. We were at 510, 400. We are now at 548, 250. Now that's a big deal, right? We've seen housing prices this year go anywhere from 5 to 7% higher. So we needed the conforming limits. Now what does that mean? That means these loans to that amount will now be purchased by Fannie Mae and Freddie Mac, which is really important because 90% of your lenders out there only do conforming type loans that are sold to Fannie Mae and Freddie Mac. The other non-QM are done by the 10% of the lenders that are out there. Still a very important market, but for those who are in, let's say you're in the Inland Empire in Southern California, down in Albuquerque, maybe up in Las Vegas, what you really need is an ability to borrow more money at a conforming rate and at a lower interest rate. And that's what you get with the rising limits to the conforming rates. We also have high balance, which means in some areas, obviously these conforming limits don't make any sense because the average or the median of the home prices in that area are much higher. And those limits have risen to $822,375. That's important in a place like Beverly Hills, California, or in I don't know, name an area in your area, which is I say Beverly Hills because everyone knows that it's very easy to understand. But certainly in Tahoe and some sections of Las Vegas and down in New Mexico, Arizona, Malibu Funding, who sponsors the show, is in about 13 different states. And I'm just getting used to where exactly those high balance homes would be in those particular areas. So if you are in that area, that's a good thing because yes, you'll pay a little bit more, but they will also be able to be sold to Fannie Mae and Freddie Mac. Some of the rates that we're talking about in terms of your interest rate today. 30-year fixed rate is 2.83, 2.38 for the 15, 2.32 for FHA. That's a pretty smoking deal. 3.23, and that's also a smoking deal for your jumbo product. And your 5/1 ARMA 2.61. Anything in the twos right now is really just an amazing rate. I do think we will see rates rise next year. We will see the new Secretary of Treasury, and by the way, that's Janet Yellen. I think that's a good thing, by the way. I think that's a safe pick. I think it's a pick that will calm markets to be able to see that Janet Yellen, and she has a long history in government, but certainly as the Fed chair prior to Jerome Powell, I think they'll work together to keep liquidity strong in this recovering market, and we should see a seamless transition from one administration to another, and I think that's a good thing as well. Let's see. Bond market today, 0.84. The bonds are selling for. Let's see. What else do we have here today? The economic growth is at 3% projected for next year. Unemployment, 5% by the end of 21. High degree of unknown. Well, that's darn sure. We're not quite sure whether the vaccine will be out. We're not sure if it'll work with everybody. We're not sure everybody will take it. We don't know when actually most of the country will get on board with the new administration. There could be a tremendous amount of, pushback to anything coming out of Washington, which I guess we've experienced the last 4 years anyway. So what's the difference? Forbearance servicing, 8.5% in June. Now is at 5.5%. That's a good thing, down 3%. Let's see. Yeah, that's it. Okay, I'm Jeff Barton, your voice in the mortgage industry. That's it for today. We should have some more news. We have a lot of economic data coming out this week. We are in the cusp of December, and that begins tomorrow. Have a great day.